to facilitate all these crimes, and they made the whole thing up. They knew they didn't have any evidence, yet they're still digging in their heels. They're still asking me to come up with money to pay for their BS defenses. I've had to come up with over $200,000 already that I've had to pay them to perpetuate a BS defense that never even had a chance of winning. And of course, I paid a lot more to my own lawyers down there, but I wouldn't have had to pay any of this money had they just been a little bit more honest. I mean, I offered to settle this thing 2 years ago for a retraction and an apology. That's all I wanted. Hey, you falsely accused me of doing this stuff. Just admit that you were wrong. Admit that you didn't have any evidence, and I'll drop my case. You don't have to pay me anything. I was even going to pay my own legal bills. I just wanted them to say we were wrong. We didn't, he didn't do any of this stuff. They refused to do that, even though they knew they were wrong. Now, maybe they just thought I was bluffing, that I wouldn't sue them, and then they dragged the whole thing on, ran up my costs. But this is an extremely unethical news agency. And the irony of it is they're accusing me of doing all these bad things, of being the criminal. I'm the only honest one there. They're the criminals. Their conduct, I think, is criminal. They're the liars. They're the frauds, not me. I'm the honest person that they're attacking because of my politics, which they've admitted, because they're saying, because I am a free market, libertarian, conservative, however you want to describe me, that makes me bad. I am already a criminal for holding those views, right? Unbelievable. Of course, this is not going to fly. I don't think the judge is going to buy any of this nonsense, but it has to happen. They had to schedule a new hearing so we can talk about this BS theory that I don't have any damages, and that's not for another month that I have to wait. And so this whole thing is being dragged out. Meanwhile, I still haven't been able to officially vindicate my reputation. Anyway, I got another commercial break. We'll come back up. I got a lot more stuff to talk about on this podcast, so stick around. I'm going to change gears and now focus a little bit on the markets. Gold now back below $2,000 an ounce. In fact, it's down to $1,960 an ounce, which, is still a much higher price than it was when the year began, but we were trading north of 2,000, and we've had a pullback, including a $25 pullback today. I think at the lows, gold was off a little over $30. The catalyst for that sell-off was more tough talk from, I think, 3 different Fed members about how June is going to have another rate hike. That the idea that they could take a pause in June and skip a meeting doesn't seem to fit given how bad inflation is. That inflation is still a problem, it's still persistent, and so we need to continue hiking. And so that caused the sell-off in gold, a rally in the dollar, and also a sell-off in the bond market, particularly in the shorter end of the curve. So the yield curve steepened on this tougher talk that the Fed is going to be hiking more. And in fact, if they hike in June, which it seems like they're going to do because they've obviously just laid the foundation for doing that, and at the end of the day, the stock market went up. In fact, the NASDAQ made a new 52-week high today. And the Dow, which was down most of the day, still managed to be up over 100 points. But again, the NASDAQ was the star, especially these tech stocks leading the way up. NVIDIA up 5.2%. That's a new 52-week high. Microsoft up 1.8%. In fact, Microsoft and NVIDIA are almost back at their 2021 all-time record highs. But you had other, Google up 2%. I made it up. Meta was up 2%. Netflix up 9%. I'm not even sure what the news was on Netflix, but they were up 9% today. These are big moves. A lot of it has to do with AI. I think that's the new theme now because you have stocks that are already implementing AI to cut their costs. They're going up. But then I think the stocks that are going to be the companies that are going to help other companies implement AI to cut their costs, right? Anybody that's connected already to AI, that's kind of the new .com. And so you're starting to see a movement, or have been for a while, in a lot of these stocks. So the stock market is shrugging off a tougher Fed. But gold got hit, bonds got hit, the dollar got a boost from this. But if the Fed does this, the Fed funds rate will be 5.25% to 5.5%. That will be the new range. Now, this means that rates will exceed the peak of the prior cycle. which was the last rate hike in 2006, I think it was June of 2006, the Fed hiked to 5.25. At that time, they didn't have a range like they do now. I'm not really sure when they decided to go from a fixed number to a range. I think that was somewhere when they were at the zero bound, because they were never officially just zero. It was between 0 and 25 basis points is where they were. And so then they just kind of kept those ranges when they started hiking. But the number in June of 2006 was 5.25, and it stayed at 5.25 until sometime in 2007 when the Fed cut rates for the first time, right, on the way to 0%. But if this hike comes in June, a few weeks from now, that will put us at 5.25, 5.5. So we will be above the rate hike level, the interest rate level that precipitated the 2008 financial crisis and Great Recession. Except the difference is today we have so much more debt than we did back then. Everybody has a lot more debt. The government, corporations, individuals. So that level of interest rate will do far more damage today than it did in 2007. And we know how much damage it did then because we had the financial crisis of 2008. So the financial crisis that has already begun in 2023 is going to be much worse than the one that we had in 2008. And in fact, just even looking at debt, I was looking at some of these numbers. So household debt is now above 17 trillion. This is at the end of Q1. This is the first time that households have ever had this much debt. But here's the even more disturbing part about it is the credit card debt, because credit card debt in the quarter was flat for the first quarter. But the first quarter of a year is typically the quarter where credit card debt goes down. Why? Well, because people spend a lot of money in December because, the holidays, Christmas, Hanukkah. So people are buying gifts and spending a lot of money on their credit cards in December. And so what generally happens in January, February is they pay down those balances. So it's a quarter where you typically see credit card debt going down. But in the first quarter of this year, credit card debt didn't go down at all. So Americans are using their credit cards as a lifeline. That's how they're dealing with higher prices. They're charging stuff. And in fact, if you just look at the month of March, in March, debt was up, credit card debt, just credit cards, not, all the other debt that's going up. $17.6 billion in March alone. That's in 1 month. And that represents a 17.3% year-over-year increase in the amount of credit card debt that households are carrying. The interest rates on that credit card debt is 20% on all that money. Now, this also shows you that the Fed is making no progress on inflation.